Hey, another week for the market, another strong showing by the super mega cap stocks. The techs are leading this charge to the upside in early 2023. The NASDAQ has closed higher for 5 straight weeks, and so far there's no sign of letting up. So we want to take a look at some more stocks today. I'm trying to bring you a more regular dose of Elliott Wave Analysis just to show you how well this stuff works. Our timing is pretty good because we were able to get ahead of some of the big moves that have been happening over the last couple of weeks. We posted a video on Meta, old Facebook Meta platforms, right before it exploded to the upside, a 26% gain. Our subscribers at TrendLizard.com were able to participate in that. And we want to make it so you can participate in some of these big moves as well, because there is no guarantee that they're going to last. So we're going to take a look at 4 different things today. We're going to take a look at Apple. We're going to take a look at Microsoft, NVIDIA, and then by popular demand, we're going to take a look at the Nifty 50 index, kind of the Dow Jones for the Indian markets. So we'll take a look at all 4, show you where the opportunities are and what to be careful for as we progress. So let's take a look at some charts. Here we go. All right, y'all, let's start working through some charts here. We're going to start with Apple, AAPL. Incepted back in 84, obviously been around for a long time. Didn't have a super glamorous start, spent most of the 90s trading sideways, very cheap after being corrected, obviously, for splits and things like that, but really got going starting in around 1998 and has been in this massive uptrend basically ever since then. And the way we have it labeled is off that, I think, late 97 low is a first wave, a second wave to the downside on a very large time frame, and then basically everything that's happened since 2003 to the upside looks like one massive, pretty much uninterrupted third wave advance. Obviously, there were some large pullbacks along the way, but here we are. So basically, the way I see it, there's really only 2 ways you can look at this from an Elliott Wave perspective. This was obviously a very large pullback during that .com bubble burst kind of moment. So either you conclude that this is one big third wave up that has ended and now a larger fourth wave has begun, or that it's still in that third wave advance. I don't really see any other sensible way that you could label this. The way we have it, based on this labeling right here, is that that larger third wave completed and that a larger fourth wave correction has begun. The implication being that we are now getting a correction that's going to be similar in size to what we saw back here. And there are reasons to think that this is a larger degree move. As we go in, you will see that. So let's go ahead and zoom in here. This takes a look at basically just the 5th wave of that advance. So it's the advance off the 2013 low from here, basically wave 5 to the upside here. That takes a look at it, shows it in greater detail, shows you why we think it's complete. It looks like a 5-wave move in a general sense. And then when you dive in and take a closer look at each up leg, each one plays out in a nice 5-wave form to the upside. This was a larger pullback back in 2015, but really what we're seeing now is the largest pullback at least since then, but I think on a larger time frame, since at least back here in 2013 when we had a larger degree correction. So this looks like the start of a larger degree correction. Let's go ahead and zoom in again and take a closer look at that pullback. Now the good news is, by all measures, this pullback that essentially started at the start of 2022 looks like a counter trend move. Pretty amazing, actually, that it's lasted almost exactly 1 year to the low, from high to low. But again, the good news is it looks like counter trend movement. ABC looks like a counter trend move. That move was nearly completely retraced. And then the next down leg that we got off of August high 2022 is a 3-wave move. So that looks like a counter trend move. That's the good news. Looks like a counter trend move. Therefore, on the larger time frames, the trend is still up. The bad news is it seems like it's probably not yet over. Obviously, what's happened in 2023 has been fun. It's been incredible. We have our subscribers owning it at TrendLizard.com. But it looks like a counter trend move that is not complete. So our expectation is that Wave A completed back in June, and all this big back and forth movement since then is one large B wave. You can see wave A, Wave B, and Wave C. And when that completes, once Apple moves its way back up towards those 2022 highs, we expect another down leg again as this massive swinging type pattern continues. So a move below 135 at any time would look bearish. I don't think that's going to happen. The expectation again is for a move back up into this area and for price to again turn lower as we get that larger 4th wave correction. This move took, what do we got here? Basically 2.5 years, 3 years maybe. We're at about a year obviously, so far with what's happened here. So, maybe a similar time frame. I just don't think it's in a place that it's going to resume its overall uptrend. But it is bullish on a longer time frame, just not until a larger correction forms. If you want to play this guy, my recommendation would be to play the swings as they happen. So that's what we're looking at with Apple. Next, we're going to take a look at Microsoft, another super mega cap stock here that has been pretty much nothing but bullish. Obviously had a pause here for about a decade in the early 2000s, but has resumed that uptrend here. The early days, you can see a pretty clear 5-wave move. That big pullback looks like an ABC move, and then whatever happened off that 2009 low is what we're interested in. So let's go ahead and zoom in and look at the details of that move. That move looks to me very much like a 5-wave move that is not yet complete. We've got a first wave up here, second wave, a very large extended third wave advance to the upside, and then a larger fourth wave correction that is currently underway. I don't see any other great way to look at this. There really hasn't been any big pullback to match this second wave here. And we're looking for a 5-wave move, right? Every time we're looking at a trendy move, what we look for is a completed 5-wave move. So it makes sense then, if we don't have a completed 5-wave move, that we should get one before this massive up leg completes and before a larger correction follows it that corrects the 5-wave move. So we're still looking for that completed 5-wave move. Doesn't look like we're there yet. So let's go ahead and zoom in. This takes a look just at this up leg towards the end here. Off of the 2020 low, it's a 5-wave move. It obviously is, because the pullback that's followed it makes it very clear that this up leg is over. So it really doesn't matter how you label it. It's a completed up move. And then you can see that this is, in fact, a larger degree down move. So the good news is it largely looks like a counter trend move. There's a lot of overlap within the pattern. If it is a counter trend move, it keeps the overall trend heading up. And again, that's what we think it is anyway. We think it's a counter trend fourth wave move. The problem is it does not look like it's complete, and I'll show you why. Let's go ahead and zoom in just on the pullback. Here's that counter trend labeling I was talking about. It's littered with 3-wave moves in both directions, some little trendy moves for C waves and things like that. But the most important thing is, if we're trying to find an end to a counter trend pattern so that we can determine when the uptrend will resume, we should see some trendy upside action, right? For it to indicate that things have changed, that the pullback is over, and that the uptrend is resumed. That's not what we're seeing. If we look either off of October's low or November's low, we're getting this sideways choppy price action. We had this move basically off the ultimate low in November. Nice recovery, gave it almost all the way back in December and early January before price turned up again. So, this thing is just trading sideways back and forth. The swings are fun. They seem interesting, but they're just as quick to give them back. And it's a counter trend mess. And I think that's a pretty clear sign that this is just a counter trend affair. And so far, it's only been able to retrace 61.8% of this down leg right here off of August's high. Therefore, it might not even be a larger degree of recovery. So it makes it pretty hard to be interested in Microsoft when you're not getting any type of action that sets up a clear path to higher prices. So on Microsoft, we still think that this pullback, which fits as a larger degree counter trend fourth wave, is not yet over. We expect lower prices. That'll be confirmed with a move below 243. There's Microsoft. Next up on our agenda is NVIDIA. We've looked at this guy a bunch. Let's do it again. It was incepted back in 1999, some back and forth action. All of this looks like a big ABC kind of running correction. And then off of that 2008 low, things got more interesting and has given us a large 5-wave advance to the upside. Once it completed that in late 2021, a very large pullback emerged that has retraced a little bit more than 61.8% of this entire up leg. Doesn't look like that, obviously. It looks like a small move, but that's because this is a logarithmic scale. If we look at it in a different light, you can see just how big this decline has been. Now, that's not the only thing that's going on with NVIDIA that concerns us how big this sell-off was. Let's go ahead and look at the decline itself. And the decline itself looks like a 5-wave move fairly obviously. It's hard to call it anything else because it is fairly apparent. So if that's a 5-wave move, one thing that we know is that we don't just get singular 5-wave moves. That must be the first leg of a larger move. The way we have it is that this is wave A and that we've been in this larger recovery off of, I think, October's low, maybe September, not quite sure. But that this is wave B, and then another 5-wave decline will emerge to give us a zigzag pattern, an ABC pullback on a larger time frame. And that again is based on the fact that we're getting a trendy 5-wave down move, as you can see here. Let's go ahead and zoom in. This takes a closer look at that 5-wave decline. Everything is as it should be. Every down leg sports a 5-wave form. And the recovery so far is very clearly a 3-wave move. Doesn't mean it can't get bigger. It certainly has the potential to. But if at any point it fails and moves back below 170, it's going to indicate that this is in fact a counter trend move, and that not necessarily right away, but that another big 5-wave down leg is in the works, and that will be something that you have to watch out for. So let's go ahead and zoom in just on the recovery. It's been a nice recovery so far. The up legs have been very strong and trendy. It's done everything that it should have. This pullback retraced right around 61.8% of this up leg. Everything's been keen and peachy and all those things, but again, it's a 3-wave move. It's followed basically a trendy 5-wave decline. The implication has to be, or the expectation has to be, that this is a counter trend recovery within a larger pullback. And if we zoom back out to that longer term time frame, that's what we're talking about. We got the completed 5-wave move. What happens when 5-wave moves complete? We get larger ABC pullbacks. That's the expectation here. Since this down leg is trendy, we got to think it's wave A. Got to think B wave is going on here, and could be followed by a C wave. Now, just because we have a 3-wave move for wave B doesn't mean it's going to be that and it's going to fail. If you look at this B wave here, these things can get pretty complex. B waves tend to, so we would expect a longer B wave to play out ultimately before we get that C wave decline. So be aware of that. It's another one where opportunities will exist, some pretty good swing trades, but I don't think you can hold it as a long-term holding thinking that it's going to continue with the type of stuff it has done before. So there's that one. Now, by popular demand, pretty much every time I put out a video, I get interest in people wanting me to analyze the Nifty 50, basically India's Dow Jones. So we're going to do that now. We're going to take a look at the Nifty 50. Here's the chart. We've done it before. I haven't updated it in a while, but things have largely stayed as we have expected them to. So back in 1990 is where our data goes back to. We have a first wave up, a larger second wave pullback. Everything since then looks like a third wave advance. That is not yet over. I have wave 1 of that third wave advance here, wave 2, and then wave 3 completing at the end of 2021, and a larger fourth wave correction starting now. So let's go ahead and zoom in. This takes a look at that third wave advance off the 2008 low. This is how I labeled it. So you can see the details and why we've labeled it as we have. And basically the only two larger pullbacks we've seen off of that 2008 low, this 2011 move, and then that COVID crash back here. And those make up the second and fourth wave pullbacks within this recovery. A very nice recovery, obviously off of the 2020 low, and then this choppy kind of messy action that we've seen since then. Now let's go ahead and zoom in on this action here to show you why we think it is not yet complete. For starters, the good news about the pullback is, like so many other things we're looking at, it looks like a counter trend move. You look at this action off of the 2021 high into the June 2022 low, very clearly counter trend price action, and we know it is because it's been completely retraced by this recovery. The problem is this recovery itself is a 3-wave move. And what do we know about 3-wave moves? They're counter trend moves. This is not the stuff of trends. So if we have a larger counter trend pullback and the recovery that happens within that move is counter trend itself, really the only conclusion can be a larger counter trend pullback is going to form. So that is our expectation. We think a larger pullback will happen. We can see Nifty moving back to June's low before it's all said and done. I'm not saying by any means that it's going to go directly there in any type of straight line, but that's the setup. And we're just trying to listen to the story of the charts as it's telling us. And if we look at a 3-wave move like this and call it anything other than a 3-wave move, then what are we doing? Basically, we're talking to the charts. We're not listening to what the charts have to say. So that's the deal. A move above 18,300 would question this and would make us wonder what's really going on, because that would make this a counter trend pullback. But again, the expectation is for a larger correction and ultimately for Nifty to work its way back to June's low before this larger fourth wave correction completes and before it's able to get started on that next 5-wave advance for wave 5. That'll complete the larger black third wave. So there you have it, folks. I hope these videos are helpful. I'm just basically trying to hit the things that people want to see. The things that are popular out there and hitting the news and the headlines. Obviously, there's been a lot of news and headlines lately Market's been on a very nice recovery. So I think our timing was good to get some of these videos out before things popped off. Like we did a video on Meta recently, and that thing went nuts this week, gained, I think, 26% on Wednesday or Thursday. But TrendLizard subscribers were in on it, and they are in that position, I think, up about 50% at this point over just a month or two. So we're having a good time. And you can do the same if you're interested in Elliott Wave Theory and using its predictive power to understand where you should be invested. Come visit us at TrendLizard.com. We look at 80 different instruments, stocks, ETFs, cryptos, depending on which services you sign up for. And we trade them. We tell you how to trade them with low-risk scenarios. So come visit us. Have a wonderful week. We'll talk to you again very soon. Take care.